Welcome to today's webinar. It's the fourth edition of AI Waves, Applying AI in Business. For those of you who are here for the first time, let me quickly explain the idea behind the event. AI Waves is basically a series of webinars organized by Miquido, where we are focusing on AI and machine learning and the opportunities they bring to different businesses. And today we'll focus on fintech and digital banking and how the future of these industries will look like in the light of the latest technological innovations. And before I introduce our great speakers, let me quickly go through the logistics. Like I mentioned, we're recording the session, and you don't have to worry if you occasionally miss something, because we'll send you the video after the webinar. Please just remember to check your inbox after today's webinar. We'll try our best to deliver the recordings till the end of the week. And another important thing is that you can write all your questions on the chat at any time during the discussion. And we'll gather all of your questions and bring them up on the QA session that will take place after the main discussion panel. So let me introduce our speakers. So maybe let's start with Chris. Chris is the CEO of Nextbank and a leading cloud core banking provider in Southeast Asia. It offers a credit scoring system that implements a new approach to credit risk assessment using machine learning. This solution was implemented in several banks and processed more than 500,000 high-risk loans. The Nextbank Cloud Core Banking solution was shortlisted as a finalist of 2018 Singapore FinTech Awards. Then the AI credit scoring made to the finals in 2019. And finally, Nextbank won the second place for the best fintech startup in 2020. In addition to his duties at Nextbank, Chris is also CEO at Miquido, a software house that specializes in building machine learning solutions for several industries. In 2020, he was featured in the 40 under 40 ranking by Mobile App Daily, among other influential young leaders. Hello, Chris.
Hello, everyone.
Hello. Rūta, can you hear us now?
Yeah, I do hear you. Hello, everyone.
Hello, Rūta. So maybe let's introduce Rūta. Rūta Merkevičiūtė is the Director of Financial Services and Market Supervision at Bank of Lithuania. She's responsible for supervising over 130 fintech companies and other payment service providers. She's also a co-chairperson of standing committee consisting of EU 27 competent authorities on payment services at European Banking Authority. Rūta has a professional legal qualification as an attorney at law, and the past 10 years has been working both in the private sector and the financial sector supervision in the areas of responsibility that include AML, payments, open banking, lending, crowdfunding, investment services, fintech industry, regulatory sandbox, and transposition of EU directives such as PAD, PSD2, and AMLD4. So, hi, Rūta. Good to have you.
Hello.
Okay, and let's move to the third speaker. David Gyori is globally renowned financial technology trainer, author, advisor, consultant, and keynote speaker. David is also CEO of Banking Reports London, providing top-quality fintech training for bankers all over the world. He is co-author of 5 internationally published books. David is a frequent keynote speaker at international banking and fintech events. He has provided advanced training programs face-to-face as well as online in 55 countries in 7 years. David holds multiple key international positions. He is a founding member of the World Fintech Association, International Resource Director of the Asian Banker Group, and a member of panel of judges of the International Excellence in Retail Financial Service Program, as well as a member of the panel of judges of the Financial Technology Innovation Awards Program. So, hello, David.
Thank you.
The next expert is Shafique Ibrahim. He's a digital transformation and payment leader in notable CIO and CDO positions with 20 years of experience in shaping and delivering digital growth in payments and cross-border remittances with advancements in strategic partnerships with fintech, government, and FIs. Shafique has developed and executed a wide range of strategic programs with an emphasis on digital transformation. He's a member, advisor, and speaker at various blockchain, fintech, and payment forums. Also, he has received various CIO and CXO awards and was recognized as one of the 50 most influential payment professionals at World Payment Congress. Hello, Ibrahim. Good to have you here with us today. And finally, last but not least, please meet Dr. Tirath Virdee, who is Director of Artificial Intelligence at Sensory Intelligence and founder and CTO of fintech startup called Zenesis Limited. Also, Tirath is the CTO of DRE Digital and CTO of the Good Data Company. He's involved in researching, applying, and writing about AI, blockchain, quantum computing, and cybersecurity. Tirath's primary interest is in intelligent data. He's a permanent member of the UK all-party parliamentary groups on AI, blockchain, and an advisor to the Scottish Government on AI strategy. Tirath has a PhD in engineering mathematics and is the author of Data Alchemy, the Genesis of Business Intelligence, as well as a major contributor to the new upcoming reference work for legal profession, AI, Law and Regulation. He also holds a number of other board positions on various new startups as well as some VCs. So, hello, Tirath. Okay, so now let's move to the main part of the webinar, our panel discussion. We'll divide it into 3 parts. First, we'll speak about the implementation of AI in modern banking. The second part, we'll talk about open APIs. And at the end, we'll cover the issue of digital payment ecosystems. Chris will moderate the discussion. And once again, let me remind you that all questions can be posted on chat and will be answered during the QA session after the main panel discussion. So, Chris, let's get started, and the stage is yours.
All right. Thank you very much, Gyori. Thank you for such a detailed introduction. Well, as you can clearly see, we have a very strong team, so I do hope that the discussion will be very interesting. So, as Gyori mentioned, we will start with a discussion on AI. So basically, as you have probably noticed over the last few years, AI has been one of the hottest topics. And all major organizations have been trying to apply AI either to improve their processes or to automate repetitive tasks or to increase efficiency. And there is plenty of projects, but I would risk saying that there is not that many successful projects. And what I would like to discuss with you actually is what's your opinion on that? Do you think that this is still like a technology that that requires time to get matured, to actually find its real practical implementation across different industries? And how about finance? From your experience, have you seen any successful implementations of AI either in banks or in fintech, broadly speaking? And if so, what kind of implementations they were, and what do you think was the main reason that they were successful comparing to other projects where organizations were trying to apply machine learning or AI in their regular operations? Have we lost Rūta? Because I cannot see her. Yeah, I think we have, right?
Shall I have a go at this one, Chris?
Sure, please go ahead, Tirath.
Yeah, I think the big there are successes, and I can take you through those. But I think the big problem starts in what people believe to be AI. You know, AI is the science of enabling computers to perform tasks that previously or normally would require humans. Yeah, and you know, there is not much AI involved when it comes to human processes and tasks. You know, because it is very much, you know, your heart in strings and so on, and there isn't enough data. And I think as long as we start with there and sort of say, is there any data that we can use to improve some of those manual processes, and then that comes down to procedures, or is there enough data when some of these processes have been automated to make them more efficient? You know, that's really normally the place where we start. The normal automation tools, you know, such as Blue Prism or Automation Anywhere or UiPath, you know, there are many examples of them being used successfully. And I think when one talks about processes and tasks, one has to be careful. Are these processes and tasks implemented in machines, or are there still humans that are doing that? And I think that's the first point to get clear. Then we come on to, I would sort of say, are there things that AI, once these things have been implemented in AI, are there things that AI can do in terms of enabling the human hybrid? Are you going to get lots of decisions? Machine is sort of telling you which things to do. And because of different human factors, human psychology and so on, everybody would end up making a different decision because they're simply wired differently. So then you come to a human hybrid where it sort of says, well, normally, all your department, all your bank ends up making these sort of decisions, and here are the top 4 or 5 that are made. So you end up normalizing your procedures and so on. Normally, with implementing anything to do with automating these processes, it's human factors, it's your people issues that let you down, not the machine issues, in my view. So that's the way I would look at it. There are examples where I've used AI in all seriousness, but we'll come to those a little bit later after the other speakers have spoken. Those things such as, fraud detection and management, trading intelligence, assignments and management of customer-facing information, advisory agents, chatbots, and so on. Those are well tried and tested things. But I'll come on to the things that are coming up in terms of AI. But that's where I stand on the subject.
I see. Thank you very much. Before we let others comment on that, if I can have one more question. So do I understand you correctly that you're trying to maybe suggest that people are expecting too much from AI because everyone would like to actually AI to make the decisions without this human factor, but really the real value comes when you merge AI together with this human factor and the aspects that you have listed?
Yeah, it's always a human in the system that's letting you down. Organizational structures, people who've got a lethargy in terms of trying some things out. And I think, where these things fail is because there's a real disconnect between the technology and the management of it in your DevOps stack and in terms of what the management expects, or even what the customer expects. So that's where there tends to be a disconnect in my view. But there are really good examples of where it has been successful, where the management has been there, where organizational processes and procedures have been there, where all the things to do with corporate governance and so on is well thought out. Yeah, so we can talk about those. But I don't think the limitations are on the AI as much as on the human, as to what humans want out of it.
Thank you very much. Shafique, you were exposed to many organizations, many projects, I guess. So what's your experience with implementation of AI in practice in fintech organizations?
So I partially do agree with Tirath. I mean, yes, I mean, sometimes like AI has become more of a hype at times. All right, it's not being understood or properly positioned in a way it's supposed to be, right? I personally believe it's more of a hybrid at the maturity level that we are today, right? I mean, we cannot have AI doing everything and not humans involved. It's more of a balance that we need to bring in right now. I mean, a few of the examples, let's talk about. I mean, Arthur spoke about the RPA as one of the things. I mean, RPA has been there for the past couple of years, and he has named a few of them. Many of the organizations are using it in different forms, right? But then again, in RPA, you have two models, right? Attended and unattended models. This is one thing. Right. And if I give an example of, let's say, compliance and AML, which is one of the hot topics usually in banking and finance, I've seen organizations where they have an army of compliance officers looking at the transactions. And I have seen organizations where half of the process is taken care by AI and only those, high alerts and triggers and flags have been taken care of by the humans, just to make sure that whatever AI is reporting is genuine. There are no false positives, right? So that the proper action has been taken. Right, so just to balance between the AI and the human involvement over here. I have also seen cases where a customer support has been driven by AI, and that was a major a flop show, I would say. I mean, I'm one of the largest bank in this region. They did this thing. They launched an AI a bot where the customers can interact. Okay, but there's some basic fundamentals that we miss out. All right. And one of the fundamental is like, whom are you trying to serve, right? So a backend process, you can have AI, hybrid mixed together. But when you talk about customer interactions, and you have to be very careful, right? And if the customer is calling you, okay, that means it's an analog call. It's not a digital call anymore, right? And you need a person to answer that call. But of course, if the person is chatting with you, then yes, you can have an AI bot communicating to a certain level, and after that, passing that call to a human at the end, before the customer gets really frustrated. So a balance is very much required. We have not really gone above the automation for a couple of reasons. The kind of the quality of data that we have today in the banking also. And data becomes a major concern when you talk about AI, because banking and finance, many times we talk about core banking solution, but then sometimes we have those legacy silo systems running where you don't have the right data to really use AI to make the right decisions, right? And that's another challenge that I've seen personally in many of the organizations where you have core banking system where you have transactional data, but that data is not enough really to understand what the customer behaviors are. Right. We talk about personalized services, personalized communication, more personalized product and services, but then how do you build that? And definitely AI plays a key role over there. But then if you have the right fuel to it, then yes, it makes sense. But if you don't have, then, you got to be very careful not to just put everything on AI and then you kind of sit back and say, hey, something went wrong. Whereas you know what went wrong, right? So, well, of course, as we move forward, we'll be discussing a few other use cases, but, I would say data is a key factor, right? When you look at AI, balance is very much important between the human and AI, because at this stage, even when you speak about it, we're not mature enough. And even if you think we're mature enough with AI, I still believe that let's take a phased approach wherein we introduce, in multiple phases rather than going all big bang. All right, Chris, I think we
lost Chris.
We lost him. It was too much of information to Chris. I'm looking at his eyes and I feel like, oh my God.
Yeah. It looks like that.
Yeah.
So maybe David or Rūta? Go on, David.
All right. Please.
No, I said you could. I will summarize from policy side, so about AI. So.
All right. So can you hear me?
Yeah.
Perfect. Great to be here. So first of all, when we ask if there are successful implementations of artificial intelligence in financial services, we have to define what we consider as artificial intelligence. And in this manner, we have to dissect three things. The first is traditional software. Level 2 is narrow AI, and level 3 is artificial general intelligence. Obviously, we very well know that AGI, artificial general intelligence, at least publicly, does not exist yet. Well, probably the word yet is an important one in this case. So what we can talk about as AI is narrow AI. And narrow AI has been very successfully implemented in many areas of banking. However, typically through vendors, through third parties, banks, including global giants, lack the full internal AI, not advanced software, but AI capabilities. And a couple of years ago, I did a project for a large bank in the Netherlands, and they desperately wanted real AI internally, to be capable of coming up with deep neural network propelled machine learning solutions in-house. And we have done the calculations, and actually the results showed that even for this well over $1 trillion total assets banking giant, it would have been a mistake to have a full internal AI capability in-house. This is one thing. The second thing is, who has this capability in-house and deploys it in financial services? Well, the answer is simple: technology giants. So typically, Google, Apple, Facebook, Amazon, Baidu, Alibaba, Tencent are 1, 2, or 3 steps ahead when it comes to data, big data, very big data, and AI compared to traditional financial services providers. One of my favorite examples is the credit disbursement and credit decision engine of Baidu. Baidu is actually a large lender. Baidu is like the Chinese version of Google, the search engine, and they have huge amount of dynamic data about every user, or basically every user, and they mix it with additional data sources, structured, unstructured, and so on. And based on that, they are making thousands and thousands of fully automated credit decisions per day. Or let's look at another Chinese technology giant, Alibaba, with Sesame Credit. With Sesame Credit scores, the de facto national social credit scoring system of China, having over 1 billion users, providing over 1 million new data points per user per day. Start to multiply those numbers and you get to what big data really means. So technology giants are one or two steps ahead in AI, and even the largest financial services providers typically lack the internal talent and resources to do deep learning level, fully internal AI.
Mm-hmm. Thank you very much, David. I'll try to structure a little bit this discussion. So basically what we have said so far is that the critical items or factors to implement AI successfully is, first of all, data. And therefore you said that big giants actually have an advantage because they have, of course, plenty of data they can use. They also have technology resources to process this data, to implement the algorithms, the solutions. The second factor is this balance between the machine and the human factor, right? And this brings me to the next question, actually, which is trust. From my personal experience, when we implemented credit scoring using machine learning, a couple of challenges that we faced were related to the trust to the results presented by AI. Because basically, even though we have proved that looking at the historical data and doing training and doing tests on the historical data, it proved to be really very accurate. At the same time, we tested it over several months in the production as a recommendation tool, not the decision tool, right? And we came to the point that the machine was actually making the decision almost as accurately as a human, or sometimes better. But then we ended up with the question, with the following question: how is the result being calculated? And what are we gonna tell central bank if they ask us how we calculated the score for a given client? Because with scorecards, like a very typical implementation of scoring algorithms, it's simple. You can show the algorithm and you can explain. With machine learning, telling central banks or auditors that, well, basically, I'm not sure how it was calculated, but I'm sure it was correct, is not the best answer. And This is like a post-production, right? Because we talk a little bit about pre-production, preparation for the implementation of AI project. Now I'm moving a little bit towards the challenges post-production. Tirath, what's your experience? Have you experienced something similar to that?
I agree. Look, I think, Shafique, you really hit the nail on the head. The key issue is really that data. I often sort of say anybody that talks about AI ethics really don't know what they're talking about, because fundamentally the issues really come back to data. You can talk about AI explainability and so on, but fundamentally what goes in is going to produce something out. So what you have to do is you have to regulate what goes in. So whether it's real-time data, static data, you have to have these processes in the middle to do with security and provenance and lineage and so on. You have to have these things about governance and law and ethics and things like that, and then feed it into your first, second, third, or fourth generation AI. And I think that issue about trust is really, for me, there are really 4 issues around data. And I normally end up doing a presentation on this thing, and it relates to what we say. Sorry, let me just pull something up, which I tend to use as a... So there are issues to do with, the issues to do with trust are to do, like I said, to do with lineage and explainability, fairness, robustness, legal and ethics, and governance frameworks. Then there are issues around data, about its completeness, about its origination, about its quality. And then you have issues about data. David talked about the big tech companies, the tech giants having access to all the data. I'm afraid I don't agree with that. I think there are lots of bits of data. There are some small fintech companies that are making success that the big tech giants are just not interested in. And that really comes down to some of the leading edge, non-open AI things that can be done. So we, for instance, were working on an AI quant, and we got bought out. We got bought out because we were working with spiking neural nets, the way the brain works, rather than the current deep learning neural nets we have. So there are small companies that can innovate, that can lead the tech companies. Eventually, those tech companies end up acquiring you because you've done something unusual. And I think just swamping everything with data is not the way to go. More and more data does not necessarily give you better decisions. It's the data entropy that's going to give you that advantage. Yeah, so I think one has to be very careful about how you're regulating it, which bits of data you're consuming and why you're consuming it, and what the data context is. Then there are issues to do, as I said, with the cost of acquiring the data. I know fintech companies that are spending hundreds of millions a year just acquiring the data. Yeah, so it becomes a cost of the data and the return on investment you're going to get. What's your DevOps stack? How are you going to store it? How are you going to have data sustainability? If your data storage costs are going to go up exponentially, why are you holding it if they're not adding a value? And then it comes down to issues around your data strategy. What's the business value of it? How are you going to monetize that data if you can monetize it? How are you going to get to that intelligent data that I'm so on to? How do you end up constructing your data objects in terms of their ontology and taxonomy? How do these things relate? If they don't relate to each other and they're not going to be any intelligence, why are you analyzing it? So I think that 90% of the data that can be thrown away because it's going to add nothing to your system becomes an absolutely crucial consideration. And I don't think there are many people that are doing that properly. And for me, that's one of the big things, I think, for this year and next year, where, I know companies where their data storage costs are certainly in the tens of millions. And if they're not careful, 2 years down the line, they're going to be spending hundreds of millions. So where's the value of that? You can't have infinite number of data engineers. So for me, one of the companies that I'm a CTO of is what I call, the Intelligent Data Exchange. So we end up curating, cataloging, creating these taxonomy ontologies, data value. Not all data is the same value in different contexts. The way I relate to you guys is very different to the way I relate to my children. I'm still the same person. But the thing is, it's all context dependent. So you have to sort of say how many times it's been used, where it's been used, things like that. Those all become relevant. And when it comes to trust, there are other issues. I think for people who treat AI as just another technology are mistaken. AI is not just like another technology. It's really capable of replacing humans in so many things. And we will have regulatory bodies sort of telling us what to do. but ultimately they're doing it on the basis of ignorance most of the time. And that's a debate I normally end up having in Parliament. Guys, you're going up the wrong street, because there will be other guys that are not that restricted that will end up getting better value of the data. They'll be making smarter, better decisions. So don't handcuff us. So I think there are issues to do with following the regulation. There's also an issue with realizing that some of that regulation isn't worth the paper it's written on.
I think that's a really good point, that it's not only about the quantity of data. The more data, the better result. And I can share my personal experience that in the successive version of the credit scoring system, we have actually lowered the number of data collection points. So basically what you're trying to say, let me rephrase, is like the quantity, first of all, the reasonable quantity of relevant data. This is the description of the data that is needed to start. All right. I would like to maybe still try to dive into some examples. We don't need to go into the systems, but at least the areas, because there are a couple of areas where we actually hope for the best results or for the highest benefits when it comes to AI implementation. And when you look at the banks, this can be personalization. Like I think this was one of the biggest promises. Like, okay, we are going to sell our data. We are going to give you the data. But in return, I do hope that we will get really personalized services. So this is one area of the implementation. Risk assessment we already mentioned. Rūta, what's your opinion on that? Where you see which area, in your personal opinion, can benefit the most from AI solutions?
I will be unpopular, but I will tell you that the regulators and supervisors could benefit most. And I will take the example of Bank of Lithuania. We have more than 150 money and payment institutions. They are fintechs and payments. And we collect a lot of data reporting quarterly, yearly. And what we had a lot of data, really, and what we wanted to create automated risk assessment model for these companies in order for us to predict where to go, what kind of inspection to do. And I really agree, it's not about the quantity of data, because we work with more like 40 indicators and we selected only 15, I guess, data spots to use for assessing the companies. Of course, we will assess these companies for financial, AML risks. Now we are going to the information on their shareholders and directors and triggers. So it's also a possibility for supervisors and regulators to be more in a pulse of the companies and to predict, especially if you have some historical data, and I mean banks, the possible bankruptcy. And one of the stages, what we really now having, okay, we use this econometric models, mathematicians worked on that, on algorithms. But the next stage, I guess, it's of course machine learning and then artificial intelligence. So this is a possibility. As we talk about the customers itself, I guess for customers, for them, the artificial intelligence is just buzzword. They are afraid and they are excited at the same time. So from this point of view, for them, it's more important to get the service that they want. And I would agree, personalization, it could be the outcome of artificial intelligence, but I don't think that artificial intelligence itself need to be for services to be personalized. Now you can use maybe not so advanced technologies to personalize your services. And I was also always the advocate that when you have a lot of data, instead of suggesting the service by default, you should come to your customer and say, I know what you want based off your data. And I guess one of the examples could be, and it's very useful just to go to your bank statement and look what kind of purchases you make and maybe suggest to the customer a cheaper one. It's also a possibility, but maybe there is no need to use artificial intelligence, a more simple solution. Another way to go, maybe my tendency to buy, I could be suggested to invest to some part of things. So this is a possibility, but very important for policymakers that this kind of personalization wouldn't go to exclusion to financial services. That instead of, okay, I know you very well, but maybe as a bank, I don't want you as a customer because maybe you are not so good. So these are the bias, and the balance should be found, and we are mostly concerned on that.
Mm-hmm. Yes, thank you very much. And I think you also touched on one important aspect that I would like to highlight, because it was, I would say, between the lines maybe, that also the implementation of AI solution does not have to be a big game from the day one. We don't need to go for a full AI implementation, but we can actually do it in a baby steps method. There are a lot of mathematical, statistical algorithms we can first use in order really to understand the domain, the problem, and then look for the potential areas of optimization where this model is already inefficient, where a human person is inefficient, and then we can apply AI there. Shafique, what's your opinion on that? Where do you see the biggest benefits coming from AI?
No, I agree with you, and I agree with what my other colleagues and friends have said. See, when it comes to data, and again, David mentioned about the tech giants have more access to data. And Tirath has his own views, but I do agree. Because see, the thing is, one of the discussion I had with one of the financial institute or banks over here is how do you personalize, the customer experience, right? How do you personalize the product and services? Now, the debate was, okay, fine. As a bank, they know that the customer is making transaction in a retail store, but they don't know what exactly they're buying from a goods and services, right? They know that they're going and buying from this retail, but what exactly the purchases are, it's not known because that's not part of the bank statement, for example, right? On the other hand, tech giants have that visibility of what products have been bought. Why? Because they are there at the point of sale, right? And when the tech giant, when they get into a banking or financial services, they have a better visibility and better data than a banking institute, right, in terms of data. Now, that's where it is. So there's a huge opportunity for tech giants to get into the banking and finance and provide those personalized services compared to a traditional bank, because there's a GDPR where a customer a lot of data cannot be there, right? So imagine Facebook has all your information, your likes and dislikes, what you do, where you fly, what you eat. When they get into that field, they're getting into a better service. Why? Because they understand they can profile you, right? And as what Rūta said, they have complete personalizing, complete profiling of the customer. Unfortunately, the banks don't have that access. Now, when we have a lot of data, I understand that having too much data is also not good. But then at the same time, from a banking perspective, if you look at that, right, we have many segments or sections in the bank, right? The compliance might say, I just want 10 data points. I don't need all that chunk over there. Right, but the marketing has a different requirement altogether, right? The compliance has a different requirement, finance different requirement. Now, if you have that data over there, it's all about how you're using the data and how you kind of build those products and services, right? I have seen in many of the organizations where the data and AI is somehow used in credit rating, in marketing, all right, and somehow in compliance. But other areas are not really using the data because they are comfortable with what they have been doing traditionally. Right. So there's a huge scope, but again, what's important is the baby step. Right. In one of the organizations, what I did was when I wanted to introduce RPA, right, for the organization, I said, guys, instead of going to other departments and asking them to implement, why don't we do it first? Right. And I had only 3 use cases. I didn't have many use cases, to be honest. The other department had more. But then I said, if I don't start from here, I'm not going to go anywhere. Right. Let's start from this side. Right. So what happened was it was an introduction, showing the benefits, the ROI, saying that this is where the benefits are. Okay, why don't we, get into the other areas, other departments as well, right? So that was more for learning, right? And that's what happened. So huge potential, credit rating, compliance, customer communication, customer interaction, product building. So data, AI plays definitely a key role. It's just how you take it, how do you create those products and services, how do you use the AI feature? Not necessarily that you have to go big bang, as I said earlier, with the AI. Let's start small, right? Experience it, learn from it, right? Learn from what your peers are doing in the industry, from their success and failures, right? Improvise on that, start launching it. Because till today, imagine we are still debating whether we should go for AI or not. Like, guys, I think we have spent enough years now talking about this. Why don't we just go ahead and do some small basic things?
Mm-hmm. Thank you very much. All right, I think we just covered, I feel like we just covered the basics, and the real discussion starts right now and we are running out of time. So let me just quickly maybe ask a very last question to you, David. So, and I will refer to the question asked by the audience. So one of the attendees asked, what should financial services be considering as they move to AI? And I think we basically answered this question a little bit, because we already said, take reasonable quality of relevant data, find balance between machine and human, educate people to trust the AI after implementation, use the baby steps method. David, anything else which is coming to your mind, which is critically important?
All right. So some of these thoughts are coming from some other experts here on the panel, but some of these thoughts are coming from me. But I fully agree with all of these, what you have listed. And let me please jump on the baby steps bandwagon, because I deeply agree with all of you in terms of baby steps. Why? There is an innovation management methodology called lighthousing. To have one project which serves as a lighthouse for your shareholders, as a lighthouse for your senior management, as a lighthouse for you, your colleagues, your employees, everyone in the society. This bank or this insurance company has applied certain narrow AI solutions and created value by applying these solutions. This project, this success story, serves as a lighthouse, symbolically speaking, and this brings tremendous amount of additional enthusiasm to subsequent projects. And one more thing about personalization: systems that relate. The ultimate next step in personalization delivered by AI in the background is emotional capability to relate. Obviously, AI will not have emotions, but AI will very soon be capable of relating to your emotions in an intelligent way. And that is the next step in marketing, in segmentation of one, in hyper-personalization, in AI-propelled customer service, or to talk about a totally different area, maybe even in some segments of politics. It's a
Thank you very much, David. Thank you very much. So this brings me to the very last takeaway that I would like to share. I think everyone who starts the implementation of AI needs to remember that there are no quick wins. And this is a very complex domain. This is not just the development of yet another solution, because there are so many factors that never been really considered in the implementation of technology, this balance between human, the data, and everything else, that it still requires a lot of education and time to get to the good solution. Thank you very much. That was very, very, very productive, and I think that's a very good starting point for those who are looking into the implementation of AI. I think we should organize a follow-up session and discuss like how the implementation really looks and what are the challenges when you already start and when you move to the post-production phase. That might be the topic for our next discussion. But right now I'd like to switch to the second discussion, which is Open API. So basically, when you look maybe at the regulatory aspects, so PSD2 is, let's say, it's supposed to be the main driver behind the Open API implementation. And I was about to ask Rūta about this because she has a lot of experience in the PSD2 implementation, but she disappeared for a while again. So looking at the PSD2, it was initially announced, I think, back in 2019, but then the implementation was postponed. I mean, the time was extended for the banks to implement it. Right now, we are at least over a year after it should be there in place. And how do you see it? Maybe Shafique, you can start this time. Do you see that we have open banking already in place, and we have all the advantages that were promised?
Well, Chris, I think I'll limit my answer to that question because the region I come from, like the Middle East region, open banking is a new subject right now. That's something that we're exploring. We don't have a clear framework, but that's something in making right now. But then yes, there are clear benefits to open banking, open APIs, and that's why the governments are regulating it, right? I mean, the banks would take the initiative. But then sometimes they're hesitant, probably they don't see that as a value. They see as a competition or a kind of a risk at the moment, right? So there's a lot of learning from PSD2 and what the Europe and UK markets are doing, right? And a lot of best practices have been taken from that and being tried to implement in this part of the region over here, right? So I'll limit my response on that for now, right? But I think we have Rūta over here, and as you said, maybe she can add to it.
That's a smart move, actually.
Okay.
In this case, it's good to be follower. Rūta, I'm not sure if you heard my question. If you did, then please go ahead. If not, I can repeat.
Yeah, I did. Do you see me, by the way?
Sometimes.
Yes. Sometimes. Okay, sorry. Okay, I will comment on this. So PSD2 and open banking in Europe, I could say it's a success story for other regions. In a way, why? Because it really happened some years ago. It was said, and all the banks were so afraid. And why I say it's a success, because the banks use this opportunity to be the third parties also, and to retrieve the data of bank accounts on account service and payment provider and payment initiation service providers. And therefore, I say it's a success. Of course, it's a way to go further on because there is still some triggers how to access the data on a bank account for your payment accounts, how to interact with PPPs and banks. But I guess when we count the account service providers or payment initiation service providers in Europe, the number of them are increasing, and the solution based on these services are also creating. One of the examples I could say in Lithuania, all the e-commerce sites where you want to buy something, you are paying using payment initiation services instead of card-based payment. So it's already a then, because there is no card-based payments using internet in Lithuania. So this is a possibility. Another part, what we saw that account information services are being used as additional services in insurance, in credit scoring services. So we see that it's still a way really to how this kind of services will be spread. And there is a big potential if other regions are thinking about that. So yes, of course, they should be involved.
Mm-hmm. Thank you very much. David, you mentioned about, or Jerzy mentioned about 55 countries over the last 7 years. So how does the implementation of open banking looks across the world, in your opinion?
Right. I mean, first of all, we have to admit something, because it's very clear. The global champion in open banking is the UK. This is very important because in the UK, open banking is up and running basically since the 1st of January 2018. Currently, in the UK, there are well over 200 registered third parties under open banking, not ASPSPs, not account servicing payment services providers, i.e. not credit institutions, i.e. not banks, but TPPs, third-party providers, AISPs, PISPs. And the UK open banking ecosystem, because after 4 years and almost 2 months of active operations. We can already call it an ecosystem. Basically, the UK open banking ecosystem shows the potential future of all other open banking jurisdictions, like a crystal ball. So when I categorize UK open banking third parties into 10 different categories, then I am also showing the potential future for Australia, Canada, South Africa, or Indonesia. Actually, when I gave a 4-day training program to leading Indonesian bankers about digital transition, banking strategies, and so on, on day 2, we touched open banking. And when we touched open banking as a topic, they put their hands up and they said, David, stop this training program. In the rest of the remaining 2.5 days, you will only talk about open banking, okay? Because we are so interested about it. In Indonesia. And why they were so interested in it? Because their central bank, their regulator, their legislators are contemplating to implement something like the UK or the European Union. And when it comes to open banking, I want to tell you the most important aspect in my eyes of open banking. And the most important aspect is API standards, to standardize application programming interfaces. And this is one of the things the UK got right.
Mm-hmm. Thank you very much. So standardization is a key point actually to implement this. Tirath, do you think that this might be the reason, the lack of standardization, that in general, I would say that the implementation of open banking is going quite slow, or maybe this is because in general the banks are considered as organizations that move slow when in terms of implementing new technologies, or maybe there is a third actually aspect. They know that this is the very last competitive advantage over fintech that they have, and opening the data will actually threaten them.
Yeah, totally. I agree with you. I think it's the last point. It's not the lethargy. It's not, other people trying to push it. It's the banks trying to resist. There's no doubt about it. I get involved with the Bank of England sometimes when it comes to standardization and so on. And in many ways, if you're an AI geek, like I am, standards mean a bad thing, because it actually means that you have to follow certain processes which are not really going to optimize what you can do with the system. It actually ends up pandering to those that would that would control you. So in some ways, it's this open APIs for banking, they've been a good thing because they've enabled that data exchange between the various customers, and the various institutions, and it's enabled people to move around. It's enabled new institutions to emerge, new banks to emerge in a way that has been revolutionary. So here standards have been useful. But I think, once that certain amount of decentralization begins to happen, and I think the word has to be that we have to decentralize that. There is still a big cartel. So once we begin to get that, then I think that those API standards will become almost irrelevant in my view, because whatever you throw at, whatever data you throw out, whatever its format is, we're going to be able to figure out the ontology and taxonomy of it and actually make sense of that data in a way that makes sense between the different institutions. It's only because we don't really have that level of ontological service that we have to have these standards. So I'm against standards in many ways, but in this case, they have worked like a treat.
Mm-hmm. Thank you very much. Rūta, so if there is a clear resistance coming from the banks, how are we going to convince them? What benefits can we offer them to actually push them to implement open banking?
Like I said, the one who are convinced, those who are acting as TPPs. And we have some examples that banks took advantage of this technology in Europe. Of course, maybe it's more banks who are more technologically savvy. So this is a part that banks themselves, they see the potential. Another part is, of course, the supervisors. When we talk about European Union and we have 27 countries, then there should be supervisory convergence how to deal with that. And especially the European Banking Authority is doing a great work, posing some opinions. We are working in our standing committee of payment services how to really interpret in the same way. And I see that more or less, if the banks don't really are eager to open up, there are some supervisors who are stepping in, even with infringement procedures. So it's very important from the policy supervision. It's the importance of this open banking is here. Of course, it's way to go if the banks themselves don't see the opportunity. So then the supervisors will show. That's the life how it's going in Europe at least.
Okay, so you're saying it will come no matter if there is a resistance or not. That's good. So what will be the biggest benefits? What should we, regular users of banking services and technologies, what should we expect as a benefit coming from the implementation of this?
I can start maybe from the users and I guess from the users, sometimes you shouldn't think, they shouldn't think about the service as a TPP, open banking. For them, it's about the experience. And one of them, we already talked with AI topic is personalization of the services. And then you have the data on your bank account. It's a possibility to know you better. Another part, to use the data of yourself in order to be involved in other services. Like I said, we see in Europe the possibilities of using open banking with this data for insurance companies. They assess your scoring better than credit scoring. So in this way, it's really about the journey of the customer journey, and how I could benefit as a customer from some value created for me, some suggestions on other services.
Mm-hmm. I would agree with that.
This benefit.
Yeah, that user experience is actually can benefit a lot. But if you think about this benefit and the related costs of implementation, so I need to implement open banking in order to improve the user experience. That's pretty costly investment. David?
Yes. So basically, one of the most exciting things a customer, a user, a citizen can gain from this is bank account to bank account payments, A to A, account to account payments in many different situations through payment initiation services providers and the entire logic and architecture of open banking. And that is useful. That's especially useful, for example, for merchants, because merchants don't have to pay interchange fee in this account to account payments setup. And if the merchant doesn't have to pay interchange fee, the small and mid-sized enterprises, typical merchants, will have a little bit more money, a little bit more margin. They can employ more people, they can pay higher salaries, and accordingly they can lower even the prices a little bit. We are talking about marginal things, but this is good for society. I like Visa, I like MasterCard, I like the other card companies, but competition is competition. And if the solution is here to disintermediate a lot of payments from debit and credit cards to account, that's good. That's something okay. And another thing is aggregate financial information, personal financial management dashboards, robo-advisors, micro-savings engines are already on the market, for example, in the UK.
Just to add over there, sorry, just to add that, David and Tirath, right? See, the thing is, when you talk about open banking, what's important is like who benefits from this, right? Bank as a custodian, right? I mean, we have a governing bodies which should govern open APIs and what are the open APIs that a bank can provide. Can they provide everything, or they can provide limited APIs? Right, that's one thing. So the governing is very, very important. Other one is mandating, right? Unless it's mandated to the banks won't do it for obvious reasons, right? One is like, okay, fine. If I'm giving the services as an individual consumer, whom are they getting the services from? Are they getting directly from the banks? No. There's our intermediary. There are fintechs and other institutes who consume those APIs and provide services. Is that monetized? Is bank getting benefits of every transaction that happens through those open API rails? Yes or no? Right? Now, if there is, then bank says, okay, fine. You know what? It's fine. If they're consuming APIs and that's monetized, I'm getting benefit. There's a revenue channel. All right. Now we talk about Visa and MasterCard, for example, the schemes, right? The schemes, as an issuer of the cards, you benefit from that. Right? Now, if I give you open APIs and you do a transaction which is A2A transfers, am I generating any revenue? If not, then there's a revenue loss, right? So if you talk about open APIs, it needs to incentivize every party over here for the consumer to acknowledge or give the approval that, yes, I kind of authorize my data to be shared with so-and-so party. And consumers are fine because, honestly speaking, I think we care about data privacy more than the consumer themselves, right? In a way. Okay, and then you go to fintechs who have the benefits of definitely, consuming those APIs and giving those personalized, attractive, fancy services to the consumer, which is far more better than what the legacy bank does. Now, as a bank over here, are they just left with a custodian of funds, holding their funds over there and just letting, fintech do the services and they lose on the revenue? That's something. So I think we need to look at all three aspects of it when you specifically talk about open APIs or open banking.
Mm-hmm. Thank you very much. So yes, I completely agree with you that we need to really make sure that this will be a win-win situation or win-win-win situation for all the parties which are being involved in this process. Because basically there is always a balance in nature, and I think as well as in business. And my concern is that, Tirath, do you think if we force the banks to implement this without giving them clear benefits, don't you think that they will just apply charges in any different areas and the general profit and loss statement will stay the same, but nothing will really change?
Yeah, I think the point about open banking, about being able to change from one provider onto another, especially with some of the new startups, they will end up losing a customer base. So it's not in their interest to pass on any of the charges. It's in their interest to offer better services. It's in their interest to start competing as though they're not acting like a cartel. So, but the biggest issue facing open banking is that of security, about liability, about creating very complex chains for data access, making it hard to prove whose fault it was and so on when things go wrong. So I'm not sure, that it's necessarily going to disadvantage anybody. I think open banking has been good for the customer. It's enabled them to have that diversity. It's enabled them to get cheaper banking, and in many ways, those services are on demand, whether it's on their mobile or whatever. I think it's been generally a good thing. The security issues are still a little bit worrying for me.
Mm-hmm, mm-hmm. Yes, I agree with that. I wanted to touch on this, but finishing on the benefits, because I've been involved in the A2A project implementation, and what I've noticed, what David said, that the merchants will benefit because they will actually be able to lower the transaction fees. The customers will benefit. Mm-hmm. I agree with that, but my experience is I was hoping that this will be a driving factor for them. But looking at the fact that those transaction fees per merchant or per customer are actually lower. Sometimes it's 1-3%. It's not the game changer for them. I mean, because right now those schemes or big players, they are actually using the scale, right? Because they have so many transactions that this 1, 2, or 3% makes a huge income. But in terms of merchants, fighting for 1% or 2%, it's not always that much enticing to really care about open banking, right?
Wait a second. Here is something very important. When we talk about 1% or 2%, we are talking about 1 or 2% of revenue. And you know, if your cost to income ratio is 80%, okay, let's say, or 95% in retail, it's often 95%, then fighting for 1 or 2% is an amazing thing and a big thing. And look, when bankers come to me and they tell me, David, open banking is pain. We don't want this. We don't, well, they don't say it explicitly, and they don't, I am just paraphrasing. We don't want to comply. They don't say it. But if I polish it a little bit, then some people could translate it like this. Then one of my eyes is crying, one of my eyes is smiling, because they are right that the legislation, especially PSD2, is very problematic. The specific rules are very problematic. Liability, cybersecurity, there are many problems. The entire secure customer authentication methodology behind it. So it's a very problematic piece of legislation. But when it comes to opening up and having a more competitive financial services ecosystem, then I am with the customers. When it comes to criticizing the specific legislation, I am with the bankers. But I don't want bankers to mix these two things, you know, to say that we don't want this because it's bad. No. The regulation itself specifically is problematic in many aspects, but letting a more open ecosystem come to banking and providing benefits to small and mid-sized enterprises as well as average customers is good.
Mm-hmm. Thank you very much. All right. So just to summarize, so we all agree that there are benefits coming from the open banking implementation, especially benefits for us regular users, for merchants. But we still need to work on the benefits for other parties involved, especially banks. The standardization might be something that can help. That's what you mentioned, David. However, as Stuart said, standardization is not always that much welcomed by the tech industry. And you also touched on a very important aspect, which is security of this. But let me move this discussion into the third panel for today, because this will be very, very much related to this, and this way we will keep the original schedule. The third panel is digital payment ecosystem, and so it's all about handling the risks, especially when we talk about merging digital payments ecosystem with open banking. So if you look at 2020, 2021, amidst COVID, I think this is one of the fastest growing aspects of banking. Just to give you an example, for example, in the Philippines only, the volume of the fund transfers, online fund transfers, over a year went up 4,000%. This is huge because they were not that used to use fund transfers online, and all of a sudden everyone needs to do that because they are actually locked in their homes. So Yes. How do you look at this? Do you think we really gained 4 or 5 years? And and apart from the bigger volumes, do you think we will see an impact in the payment methods being used? Will this drive a new payment methods right now? Shall we expect some extra payment methods because of that? Shafique, do you want to start?
Yeah, sure. Thank you. Yes, one of the things that I would say with the pandemic, right? I mean, of course, not very good for the economy, but then for digital world, and a lot of CIOs are very positive about it, because there were a lot of projects which were on the table in the boardrooms. Suddenly they got all the approvals, and we saw that moving forward, kind of accelerated. But at the same time, one of the benefits, I would say, was the consumer adoption or the learning of digital payment channels, right? A comfort with a cashless transactions, that individuals, consumers, they were into, because most of the countries, like when you talk about cash and card, I mean, the small ticket size usually used to be cash, right? The bigger ones used to be cards and all, but then now even a small ticket is being cashless at the moment, right? So people don't hesitate to remove a flash card even for $2 transactions, right? Which was not the case earlier. So there has been a huge adoption, both from the merchant, right, and from the consumer. So the consumers have realized the value. The e-commerce transactions have really gone up, right? People were in a habit, right? So to go to the store, try it, test it, and then buy it. But then now, because of pandemic, there was no option, so I'd rather rely on e-commerce, and they have experienced that, right? Of course, it has also, kind of pressurized the merchants to be online and accept the cashless transactions now, unlike before. So there has been a good ecosystem that's been built, during the pandemic, right? So the merchants are ready, the consumers are ready, and we see that transactions, right? I mean, of course, when you talk about cashless, then now we're talking about a contactless transaction as well, right? Wherein I remember my car had this limit on the contactless transaction amount, which was slightly increased, thanks to the kind of transaction I used to make, right? So that has been a change, right, in the context of transactions, if you notice, right? Financial inclusion has really gone up as well, because that was a need in this part of the world during pandemic. There was so there's a segment over here which is unbanked, all right. Now to serve them, the financial institutes were asked to be open to make sure that they can serve them for the transfers of money to the home countries and all, right? And this is where it is. But at the same time, there was a huge penetration of digital presence also. So financial inclusion was one that has really changed, and that has really increased the number of transactions. When you talk about a cashless transaction, that's one thing. The behavior in terms of contactless transactions have also increased. Those merchants were the smaller ones who are not taking the POS network because of the interchange fees that used to be applied. They had no choice but to offer it, right? So the complete ecosystem was built during this time. But of course, what we're looking over here now is a consumer driven now, because the consumers are so comfortable with this kind of transaction. Now they are expecting more from the merchants, and so that we have yet to see now what's next. Because we have seen contactless, mobile transfers, in-app transactions, right? But it's transforming, it's evolving right now.
Mm-hmm. Rūta?
Yeah, so I would talk from European perspective, and truly what digital economy enhance is the instant payments. And in instant payments in Europe, it's a new normal, it would say. Mm-hmm. So if we had cash and we can't pay just instantly, so the need of instant payment. At the same time, then there is a threat of cash because people are not using. Then central banks step in and said, we need a central bank digital currency. It's also a mean of payment in a way that if there will be if there are already in the world, but if we talk about European Union, if there will be a central bank digital currency, it will be also some kind of different way how the payments would be involved. So I guess it really had a lot of opportunity, digital payment, but of course there are threats to the usual banking system. Therefore, central banks has to adapt. For the speed has to be adapted, the instant payments. And about the inclusion, in a one way, yes, digital economy includes people, but there are still in Europe people who don't know how to use app, and there is also a possibility of exclusion. Then everyone goes to the digital economy too fast. So there is two sides of the story, and I guess in a future way we will see that everything will be speed up, but on the other hand, the policymakers will have to think what is left behind and how to address some kind of risk what we have.
I think that's a very good point. So to summarize what we said so far is like this new digital payments ecosystem growing so fast is bringing some benefits. On one side, it's inclusion, financial inclusion, but on the other side, it can actually create a gap. It's like the gap in fast developing countries between the rich and the poor, and no one in the middle. So I think that's a really good point. And also, I understand that right now the new normal is instant payments. Nobody is right now waiting for the payments to arrive after a day or two. Yes, I think I agree with that. And you touched on a very interesting topic, which I would like to discuss now, which is cryptocurrencies. There is so much to talk about this, but Tirath, do you think we can already consider it a mainstream? Did it pass the test of time?
Yeah, I think taking on the message that Rūta had, you've got confluence of technologies coming together. If you like, people, it becoming a cashless society to us being to adopt, digital currencies. And to some extent, I think, well, you just have to look at the numbers. What is it? I think, if I'm not mistaken, and maybe somebody can correct me, I think there are roughly about 50 million crypto wallets at the moment around the globe. And we expect them to grow roughly by a factor of 100% every year. So we'll soon be at a level where, within 3 or 4 years, where we'll be at the 500 million level. And then it becomes really interesting. And I think that's really what's going to accelerate, all that thing. The main driver for digital currency and decentralization has been the perception that banks and institutions can reduce the infrastructure costs. Yeah. And, if only 1 in 1,000 people currently hold a crypto wallet, it becomes very difficult to see how you can have an ecosystem where somebody walks in, 999 people are going to walk in and they can't really do that crypto exchange. So for me, that's something that needs to be speeded up. And it needs to be speeded up for a number of reasons, one of which is that many of the benefits that many crypto blockchain-based applications are going to offer are going to be in terms of digital assets, NFTs and so on. How can you have a digital reward? How can you have a digital coupon if you haven't got a crypto wallet? So if you like, there's that ecosystem that's coming, and I think it's absolutely necessary. The process of becoming mainstream, I think, is a gradual one. If you mention to people near you that they should have a crypto wallet, they'll look at you with a blank face most of the time because they've never heard of it. So it's really overcoming that education piece, sort of saying it's the shape of things to come. Yeah.
I agree with you. At the same time, you look at the pace, at how this is growing, how fast it is growing. It's really impressive. The number of users, the growing number of users of crypto wallets, right? So, and sometimes when I look at the statistics, I'm really impressed. If might be better to say shocked, that if you look at Southeast Asia, for example, and a couple of countries in Africa, there are statistics showing that 30% of adults either hold or at least used cryptocurrency in the past.
Wow, I did not know that.
Yeah, so what do you think is driving them to use that? Is it like a financial benefit? Okay. Or maybe this?
Yeah, I think there are many things. So take, for instance, another data monetization, data exchange platform. we are actually creating our own, blockchain, if you like, coin, in terms of the value of data. There are lots of those things around, but I think when you want to democratize data and when you want to bring it all in one place and where you want people to be able to come and exchange and monetize it, it becomes absolutely crucial that the providers of the data and the consumers of data have a way of exchanging the value of that. And, for me, blockchain offers an ideal aspect. In terms of cryptocurrencies, it being adopted in the Middle East, that has come as a shock to me. I did not know those figures. But if it must be that, more people are implementing ways of maybe exchanging those cryptocurrencies with fiat currencies. I think that has to be the way.
Mm-hmm, mm-hmm. Thank you very much. And I agree with you that it's hard to call something mainstream if 1 out of 1,000 people can actually execute the transaction, right? David, do you think that central bank digital currencies is something that can speed up this process, that can actually extend this adoption?
Yes. So first of all, I want to go one sentence back to the previous topic, because there is something very important I still want to say about open banking, that I agree with Tirath and I share his concerns regarding cybersecurity related to open banking. In my mind, at least, this is a very important thing, and we have to be very careful in terms of cybersecurity, in terms of risks related to the entire open banking ecosystem. So while I am positive about this ecosystem, I want all of us to be sensitive to risks as well. At least I am, and I am worried a little bit, to be honest. Anyway, I wanted to say this. And regarding central bank digital currencies, I am a very big believer. I believe that CBDCs will come. They will come very slowly. Why? Because central banks are careful. Central banks need time. And what I want to tell you about central bank digital currencies is that they not only have the potential to provide a digital monetary base, they not only have potential to preserve the efficiency of monetary policy in the age of cashless society, but CBDCs potentially coming slowly over a period of 10, 20, 25 years. CBDCs potentially can transform society for the good. Why? Because interest rates were asymmetric historically, ever since modern central banks have emerged, starting with the Swedish central bank established in 1668. Monetary policy has been asymmetric. Why? Because central banks could raise interest rates, but they couldn't lower under 0 or under -1 or under -2. Usually the rule of thumb is that when banks ask customers to give more than 75 basis points per year, so when interest rates go under -0.75% per year, then people start to take cash, even if they have 10 million British pounds or euros or dollars of savings. They will try to store it in cash instead of storing it as bank deposits. However, when we move to a 100% digital currency, 100% cashless environment, and we have CBDC implemented, all of the sudden, something entirely new will happen in terms of 350 years of modern monetary history. What is this new thing? All of the sudden, central banks will have the potential to go sometimes significantly negative with interest rates without triggering people to withdraw their deposits. If there is no cash, people cannot withdraw the money from the banking system, so to speak. And this can have huge global social benefits in terms of counter-cyclical monetary as well as counter-cyclical fiscal policies implemented better than ever in human history. And that's good for us.
Thank you very much. And if you think about blockchain cryptocurrencies, there is this big promise that unlike right now, you mentioned the giants like Google, Facebook, they have all the data, they centralize the data, they own the data. So, and then they ask us businesses, people to pay for the data. The blockchain is supposed to change it. There is no central ownership of the data, right? That's the one thing. Another thing is that the people sharing the data are supposed to earn. But do you think this is something that business can really thrive through? I mean, don't you think that there will be someone who would still try to somehow centralize services or even this data? And regarding the CBDC, don't you think that this is also a way to somehow control and centralize blockchain?
Mm-hmm. It's a good point you make, Chris. It is, the whole point about central bank-backed digital currencies seem to be an oxymoron. It doesn't make sense. Yeah, the point about decentralization, about removing the middleman, doesn't happen if you still have central banks. So I think there's something fundamentally flawed there, and giving the consumers the right to their data, so even the big tech companies, somehow need to be able to pay for it before they take it away and then sell it back to us. So I think that's, I agree with David in terms of, the central bank-backed cryptocurrencies, accelerating adoption a little bit. But I think the fundamental driver is going to come from the apps that various people end up using, the ones that are using decentralization and so on. And I think that's really the eco space that I see emerging.
Mm-hmm.
See, just to add, Chris, over here, see the central bank cryptocurrency, right, and CBDC. I think we need to look at it in a slightly different way than what we look at other cryptocurrencies, right? The cryptocurrencies, we talk about decentralized, it's a totally different ballgame altogether, right? We talk about central bank, there's a different objective to it. It's not decentralized. It might be decentralized within the country or within the countries that they collaborate with in a way, right? It has its own benefit from an economical perspective, wherein you have a complete track of all the transactions, all the digital currencies where you spend and all this thing, AML from an AML compliance point of view, right? Today, as a cash, you have no track of it, but from a digital currency, CBDC, you have a better control, better visibility, that's one side of it, right? Of course, it's not as compared to what we have in cryptos. That's one thing. Now, cryptos coming in the mainstream today, most of the cryptocurrencies are used as a trading tool. They're not really mainstream for transactions. As such, there are a few of them, all right, which have been used for transactions. Otherwise, it's more of a tool which is used by many to kind of see, how the trends are going up, and generate revenue out of that. This is where it is. So there are two different objectives, two different purposes of both the currencies, basically, right? So I think we need to look at slightly in a different fashion altogether. You're right, CBDC, it doesn't serve the purpose of excluding central banks of these things, but we also have to look at the impact, overall, all right, of not having central banks involved, in your financial transactions, right? Today, we talk about removing the middleman and having, what do you call it, decentralized, where there are no banking and there's no central bank regulations and all those things. Sounds good, right? But then have we also looked at the impact of that, right? Yeah. So it's a nice fancy word. We really like this thing. I like the way the currency goes up. I'm making a lot of money out of it. But then, what are the impacts? I haven't seen many of the forums talking about, what is the impact of removing central banks from the ecosystem and letting it just have a parallel economy running over there, right? Anybody can own anything and anybody can, dictate the terms, right? So we have to look at a different subject altogether.
Yeah, no, I think that's a really good point you make, Shafique. The decrease in the use of cash and the objective, that's being pursued by the central banks is the anticipation of the disappearance of cash. And they want to create an efficient means of payment and strengthening regulation. How does strengthening regulation equate with decentralization? Normally, as I said, regulation and standards end up favoring the incumbent. Yeah. And if you want to level the playing field, if you want to remove, these financiers who seem to have the upper hand, that from a public perception point of view, to go decentralized, just seems to make sense. And there are a lot of very wealthy people as well as some poor people that have been making good money out of it. So compared with physical cash, CBDCs, of course, allow for new monetary policies and enable the future of digital economy. And the drawbacks, as I think David was saying, to some extent, is the security and privacy concerns and the concerns about resilience should there be a big systems outage. You have a Corona thing come out from the sun and all of a sudden all your computers go down. What's happened to all the money? Yeah. So there is, if you like, those resilience issues that really do come up. Compared with bank deposits, CBDCs, of course, need to be designed very carefully. But I think that they do present more benefits than drawbacks. Indirect CBDCs present less benefit and also less drawbacks as they're closer to the existing electronic money, I feel.
Mm-hmm. And speaking of drawbacks and the security, which we've been touching on a couple of times, do you really feel we should be concerned about the security? Don't you think that actually right now the security incidents became some kind of a normal, the data privacy, the breach of data privacy, looking at what I don't want to name, but GMs are facing right now, the problems with data privacy. Don't you think it's kind of a new normal? There will be problems, there will be frauds, and I think we don't even actually understand how much frauds are being done in a regulated banking industry right now. I heard this statistic recently that actually the total volume of frauds related to digital currencies is actually less than the total fees, only overdraft fees applied by USA banks. And you can imagine how many other fees they apply on a regular basis. Of course, it's not a relevant statistic probably because the scale is different. But still, whatever we implement, there are always privacy issues, there are always security issues. But after all, I've never seen this as a showstopper of the implementation of any technology. And comparing to, for example, what Shafique said, I think is a good point. Do we understand the impact of the lack of central banking regulations and central banks in general? Do we understand what's going to happen? What are the microeconomical risks related to that? So do you think that the security privacy should be really that much discussed?
I think that first of all, about cryptocurrencies, truly decentralized cryptocurrencies, I am very critical about cryptocurrencies. I am a big believer of central bank digital currencies, and I agree with Tirath that it's an oxymoron. Yes, it is. But somehow in monetary history, in the history of humans and money, and it's a long history. It's not just the modern monetary history, the past 350 years, but much longer story. And in this much longer story, the lesson simplified is this: innovation comes from startups, private actors, private sphere. But when it comes to money, innovation often, typically, overwhelmingly end up being controlled by the sovereign, the head of the tribe, the king, the government, the central bank, the independent central bank. And when we look at the specific stories, the specific events in monetary history, somehow this is the pattern. This is the first thing. The second thing, and yes, it's an oxymoron, but still this is the pattern. The second thing I want to say is privacy. Privacy is a very important issue, not because of regulations, but because of data. If data is the central resource of our modern economy, then data privacy is an extremely important topic. And Krzysztof had a half sentence saying that technology giants probably own a lot of our data. I am paraphrasing. You were more careful to say this. Well, not necessarily. You know that there are many regulations in certain parts of the world saying that all personal data is owned by the user, by the customer, unless otherwise traded and agreed. In China, in Southeast Asia, usually the data is owned by the services providers. In Europe, ask Germany, for example, it's sometimes different, and by default, the user owns the data. However, Tirath, I think, was very, very, very wise to touch the topic of privacy versus blockchain-based central bank digital currency. And nowadays, I keep thinking a lot about this. Can a state, should a state, a sovereign state, a nation, a country, know all monetary transactions of all citizens and all companies with perfectly robust database? Is that good for society or is that bad for society? It's an open.
Thank you, David. Last question, Shafique. Please forgive me if it's too personal, but you mentioned that you make money out of digital currencies. So I was wondering, like comparing to, for example, what Jack Dorsey has said officially, the former CEO of Twitter. He said like that in his opinion, the crypto world is somehow invented by VCs just to have another topic to make a lot of money, to support growth, and regular people will not benefit from that. So you personally, do you actually invest your time into that because you strongly believe that this will become mainstream, or maybe you're just the type of the guy that who likes to be on top of the new technologies, gadget, and you don't want to miss this opportunity?
So yeah, I'm the guy who likes just to be on top of technology, right? So see, when you talk about cryptocurrencies, right, and the mainstream, I personally believe, will be those which are stable coins, right? Asset-backed cryptocurrencies will be something which comes to the mainstream. Why? Because they will have some reliance to it, right? That's one thing, right? Volatile currencies, I have my personal concerns that no, I don't think so. Those currencies will be part of the mainstream because, Elon Musk, before buying, or let's say after buying, he says, I bought Bitcoin, suddenly goes up. and then after that he sells it off and says, hey, well, I'm selling it off, and then it goes down, right? I mean, it doesn't have any value to it, right? I mean, it's fully volatile based on certain, it's not even based on prediction, by the way, I mean, there's certain currency. So no, I would say you're right. I mean, it is something for the VCs, digital currencies, to be honest, right? I believe people who are investing in those volatile currencies is basically a trading kind of a hub where you just invest and you leave it for a couple of years. Right. I know some of our friends who kind of invested in Bitcoin in 2000, like 9 or 10, something like that, and they happened to buy 2 apartments, one in the US and one in Romania. So you can imagine, right? With that, that's what is happening. But then if you look at the graph of the crypto, is so unpredictable that you can't really risk it, right? So I'm a firm believer of stable coins, CBDC, not for any other purpose but CBDC, so that the central banks or the regulators can really manage these things. We speak about privacy. I think that's more of a blockchain, which is slightly different from the cryptocurrencies, right? And of course, when you talk about privacy and blockchain, there are a lot of use cases. There is a project that we have worked on the KYC project, wherein it's because today what happens, every bank that you go to, they do your KYC. I said, why this needs to happen? It can be a KYC on the blockchain where the consumer holds that authority. And whichever bank, whichever fintech wants to use that, the individual can kind of approve that. But that's a privacy, on the blockchain. That's a totally different thing, right? But on the crypto side, I'm not a believer of of those volatile currencies, to be honest, right? I just do that just to make sure that, hey, I'm in the trend, I understand what's going on, and it's a learning at a low cost. Let's put it this way, right? So.
Thank you very much for being that open. Yes, so to finish, I think we should say it loud that this wasn't financial advice, so because it's very popular in the crypto industry. Thank you very much. I think this was super useful, and it helped me as well as the audience, let's say, organize the knowledge, because there is so much knowledge and so much data and information about this that probably AI wouldn't be able to help if you want to standardize and organize this knowledge. So thank you very much. Let's move to the last part, which are the questions from the audience. I'll try to look for them on the chat, but yes, actually, you can help me. Mm-hmm.
Yes, we'll just organize it in a moment. So once again, thank you to all our great speakers. The discussion was really interesting, and I think everyone found something, some insights for themselves. And moving to the last part. Okay, we can see Gosia sent us some questions here. So the first question here is from Juan. What about tropophilia, the love for change? Everyone talks about resilience and adaptation, which are both reactive, and no one seems to know about tropophilia. By the way, AI is mostly tropophilia driven. I think Tirath already mentioned something. Try to answer the question. Yeah. So Tirath,
I can take it if you want. Yeah, no, I think, look, the fundamental, the thing about AI has been going on since the Second World War, ever since, systems were trying to just see where to fire a missile to have a good chance of hitting it and so on. And I think fundamentally it's driven by trying to automate what we do to letting machines do it. So the mapping between the neural structure we have to implementing those things in machines, huge value. There's no two ways about it. If you look at something like the Medallion Fund, Renaissance Technologies, what they have done with mathematical statistical algorithms where data has been curated correctly, where they've taken 10 or 20 million into something that's 50 billion, where they've been able to fundamentally change our political structures by getting people like Trump elected and so on. So we can't sort of say this is tropophilia. No, I would have to disagree. We are not there. No organization is going to go with something just because geeks like us are sort of saying, wow, what a nice thing to be doing. It's because there has to be a bottom line. And the bottom line is there. You can see, anybody, any human that tries to trade on one of the platforms, you're going to fail 70-80% of the times. Algorithms, on the other hand, enable you to catalog those things, to make those decisions better, and so on. I think the thing that we don't realize is, if you look at an AI system and how quickly it can respond, the fact that it's there 24/7, the fact that it's at least 10,000 times quicker than any human can react, because electrons in digital media are traveling at least 1,000 times faster than neurochemicals that are traveling in my brain. Those decisions are going to be quick. You're going to be able to consume all sorts of data. There are things you can do that you could just never do with rules-based programming and so on. It's all about data. I often tell people, nothing could be simpler than AI, because you're just looking at what data is coming in, what decisions have been there in the past, and sort of saying, well, when something like that comes in, that's going to be the decision you make. It's beyond human capability. So I, for example, am working with a company where we are looking at how do you present those decisions to fighter pilots when they have a different psychology and they're going into air. And, there are possibly 1,000 decisions to be made. How do you end up having a human hybrid where the decisions can be a matter of life or death? That's not tropophilia. No way. There is genuine utility, genuine method to what you might consider to be madness, and it's all data driven. Admittedly, not all, everything is rational and logical. You don't fall in love because you've calculated that somebody's a particular shape. It doesn't happen like that. There are so many other factors. AI is more than just about the rational, the logical, and the mathematical. It is bringing in humanness. It is about bringing in aspects that touch your heart, how you smile, the way you say things, and so on. AI handles that. That's why future generation chatbots will be so much better. Those in. So it's pretty gone against what you wanted to say there, what you wanted me to say, but I fundamentally believe AI is not like any other technology. It's not like electricity or the combustion engine. No way. This is something that's fundamentally going to change who we are. Okay.
Yes, I also believe that AI is real, it's relevant, not all the time. I mean, sometimes we overuse this expression, like the AI-propelled table or the AI-propelled fruit juice machine, things like this. Sometimes we inflate this expression a little bit, and that is a mistake. But otherwise, AI is very much real. Ask the former world champion of Go. Go is a 4,000-year-old strategic game. There is one problem. The guy from South Korea, the former incumbent world champion in Go, retired when a genetic algorithm propelled AI mastered Go significantly better than him in 4 hours. And the game has been here for 4,000 years. Well, he really retired after this. It's not a tropophilia or anything. He really retired. Or ask chess champions, grandmasters about the capabilities of new genetic algorithm propelled chess engines. They are not only beating human chess players, they are beating human chess players very seriously. Or ask about well, there are many other cases. There was something very important in my mind, but it escaped my mind. Another example where it's very real. But the bottom line is simple. AI is very real, and there is no other solution than to learn about it and to embrace it, but to embrace it in an ethical and safe way. Questions about ethics and safety will come when we go to the territory of artificial general intelligence. That will be a game changer.
I think that's a really good point you make, David. We humans are afraid of the stranger. That is just our very nature. And nothing is stranger than AI. Because to have a machine that's better than any human, it's difficult to comprehend. No human can beat. I mean, you try playing chess on your Apple Mac and give it 1 second to think, and you can take 10 minutes. It'll still beat you. Most people, 99% of the people. Yeah. So, I think, the thing that we need to do is to get familiar with the stranger. And that stranger is going to be good to us. There's no two ways about it, because at the moment we don't have those vectors which sort of says a machine suddenly jumps up and sort of says, I'm going to shoot you. There isn't that aspect about I am in a machine, but that a machine can be conscious. No two ways about it. I show it in the book, how you make it, about hypothesis generation, counterfactual synthetic data. Already machines are discovering drugs that no human could. Many of the discoveries in new medicines are by machines using AI. That's real progress. That's not, just a tropophilia. It's that they can see, these ontologies I talk about, they can see which molecules worked in a particular way, and they can begin to construct from research papers what combination of molecules, what those ontology, what group of objects need to come together to make a new medicine. And they're getting there. So many of the new patents are going to be allocated to companies that ended up coming up with those algorithms. So I think in terms of machines being conscious, no two ways about it. We already have machines that are conscious, not in the way we know it, but in terms of the reason we believe we are conscious is because we generate more than a thought a second, a hypothesis a second, and we are testing it out and sort of saying, what should I say to make people feel good about me? Machines can do that far better. Yeah, so it's not that. I firmly believe this is a game changer.
Very, very interesting point. Okay, I guess we can move on to the second question here. It came from Howard. We seem to talking a lot about what. I'm more interested in how. Can you give an outline methodology for the complete life cycle, soup to nuts, for an AI project in fintech?
Yeah, sorry, if I may take, because this is something that we think about a lot. So, this is a problem that we were coming up everywhere. At Capita Consulting, where I used to be the director for artificial intelligence, every new business, it's like, how do we make this real? So we came up with what we call the AI periodic table, and it's in my book. It's the first time it's been produced. So it tells you that end to end, from acquiring data to doing the ethics and the governance and the security and the provenance and the lineage, to doing the data ops, to ML ops, to one of 4 types of AI, statistical deep learning, contextualized learning like GPT-3 and Turing NLG, in terms of website being cognizant as to who's looking at it and the change for the individual user. Yeah, so that's where you're getting that almost that general level intelligence. And Google in their papers sort of say general intelligence is possible just with GANs, generative adversarial neural nets. There are people who don't believe it, but Google say that. So I think that's good enough. And then how do you actually get action in the environment? And then how do you evolve it? So there are companies emerging that will end up altering your algorithms depending on how your environment has changed. The education system, for instance, how it's changed when everybody was under a lockdown. There were no algorithms that took that into account. Why do we die? We die because you can't teach an old dog new tricks. We don't have neuroplasticity nearly enough to be relevant to the new thing and so on. So I think in terms of how we can actually show you that entire end-to-end, it's a pity we can't do a PowerPoint presentation here, but I was going to show my AI periodic table, including the 14 groups, the cloud technologies, the, if you like, frameworks, the languages and so on, how it all comes together to give you, what you want. Yeah. So there are things there. And if you contact me, we can talk through a bit more, or we can arrange another session like this where we can tell people how to do it.
So just to add to that, I think it's very important is to identify the use cases. The first important thing is to identify the use cases, and then you go into the what and how journey. Because don't just try to introduce AI because you're a fintech and you're doing everything digital, so let's do AI as well. No, use cases are very important, and then back to what Tirath said, then you put down those roadmaps and all.
Totally.
Okay, thank you. So I think the next question is also kind of connected. What is the best way to get relevant, clean data for new AI-based fintech feature like credit scoring? Is it better to build it from scratch on new data, which can take years, build it on the historical data and face all the problems related with dealing with historical data, or acquire it if it is even possible?
Do you want me to tackle it, or does somebody want to tackle it? I'm willing to go with it.
Okay.
Look, I think, without data, there's nothing. Everything is data, and data is everything. Even your algorithms are data. When you look at it, even your algorithms are data. So it is true. We are prejudiced. We are prejudiced because we observe things and we learn them, and our neurons got connected up in a certain way. And the reason for those intuition, as I say, is the integration of the chaotic diversity of data. So we get more and more data and we put it into clusters and sort of say, yeah, this person, this gap between their eyes, so that's what their type they are. It's just a thing that we do. And I think that the fact that there is data and the way organizations have behaved in terms of classifying them, of course, that's the first thing we have to adopt. And then we can do certain bits about explainability. Can you explain why it made this decision? When you look at that and you feel it's made the wrong decision, you look at the data, which bits, then you can begin to sort of say, I'm not going to use that bit of data, and I'm not going to use data with those parameters. But I think that has to be the first start. You take that data, you put it through your algorithms, you see the decisions it's making, and whether those are the decisions you want it to be making. If they're not the decisions you want it to be making, then the AI explainability, if you like alibi or whatever, lets you decode that and sort of say, these are the things that ended up, whether it's gender or race or whether it's, how well certain, those begin to come out. The problem that we have with the data from the past is, of course, it's got that, and then you end up meta tagging it. And meta tagging has somebody's imprint on it. That's the way they viewed it, which is why I sort of say, AI curated data with, universal ontology service is absolutely crucial. One ontology server is DBpedia. It doesn't go nearly far enough. So there's a real reason to extend those things if you're going to make intelligence, become journal level.
Yes, I want to jump in because I find this question very, very smart. And here is the point. When I look at specific, current, popular, successful social credit scoring regimes, big data, very big data, AI-propelled credit scoring solutions, usually there is a big problem related to these. Usually there is a big red flag, a big question mark related to these algorithms. And the red flag and the question mark is this. These credit scoring algorithms are performing very well currently. But will they perform well in a full credit cycle? When things are going wrong, when non-performing loans are going up, when the situation is tense, banks are, enforcing their collaterals in the bad part of a credit cycle, would these very intelligent algorithms perform good or bad? Therefore, one of my pieces of advice is to somehow incorporate some historic data, to look back, at least backcast how things would have gone throughout this credit cycle in 2008 or in 1990. Had I been using this intelligent algorithm back then, things like this. So be careful with credit cycles. If your algorithm performs very good in peacetime, it doesn't necessarily mean it would perform very well in less peaceful times. I'm talking symbolically.
See, I think the question over here, it talks about like, best way to get a relevant, clean data for a new AI-based fintech, right? And that's what the question is all about, right? And the question is like, shall we get historical data or get the clean data, right? Now, if you are a new fintech, like who has access to the historical data, my recommendation would be take the historical data, right? Because getting a new data is definitely going to take a long time, right? And acquiring data, it's a cost. There's a privacy. A lot of other issues are there, right? Right. And the thing is, there's nothing called clean or junk data. I mean, I've heard about, saying that, okay, fine, junk in, junk out and all. I personally don't believe that, because every data that goes in, all right, even that's a junk that's come out, it's a lot of information that comes out. And junk data out also means that you don't have the right data. That means you have to get the right data in place, right? That's information. And that's very important. So when you have historical data, all right, what's important is to understand what kind of data that you have, all right? Pick up the relevant data that you need to have, all right, for your credit scoring, that would require by your AI engine, and then you build upon that one, right? And that's one way of doing it. That means there will be a lot of noise of data that will be there, but what you need to do is eliminate all the noise, all right? Pick up only that you want to pick up, right, for your credit scoring, and then benchmark on that, and then move forward, right? And that way it helps you to kind of get the clean data, because don't expect you'll get the data that you want. You'll get loads of data. What you need to do is filter, make it clean for your purpose, all right? And that's what I keep saying, like, your purpose is credit scoring, then you get 100 data points, take the 10 data points that you need, because the rest of 90 data points might be required by somebody else in your organization, right, to profile the customer, for marketing, for communications, a lot of things, right? So that's the approach that probably, you could take.
Totally.
Okay, thank you. I guess with this answer, we can wrap up the QA session, because I think the other questions were already answered on chat.
Jerry, I had just one more point to add.
Okay.
And that is, we've talked about AI, we've talked about decentralization, we've talked about open APIs and so on. But the thing that COVID has taught us is that we are becoming more and more virtualized with the emergence of metaverse and multiverse and so on. The digital assets that are going to be out there, we're going to be trading them in virtual space. The new book I'm writing is called Virtualizing Humans, The Birth of a New Consciousness. So what we are going to be doing is we're going to be creating particular currencies that are suited to different virtual systems, to different metaverses and so on. We're going to be creating those digital assets, digital currencies, digital political systems, digital social systems, and so on. So I think the thing around data and how you end up democratizing it, how you end up sharing it, how you end up monetizing it, is the way that things are going to go. And so it's going to fundamentally affect the way bank goes, because the value of the virtual world is going to be far bigger than that of the physical world. And I don't think that point has really hit home yet. You can see many of these digital assets being for ridiculous amounts of money. And believe me, they're not ridiculous. Well, once those worlds become real, they are not going to be ridiculous. So I think that virtualization, metaverses, data economy, and so on, it's going to be virtualized. So that's where we're going, and AI is going to enable part of that journey. Okay.
Yeah, that is actually a really good conclusion to the discussion. Thank you, Tirath. So if there are no more questions, I guess you can wrap up. I hope you enjoyed it. Please remember to check your inboxes after a few days, because the webinar, the recordings from the webinar will be sent to you. And AI Waves will be also back with more content soon, probably in 2 or 3 months. And if we didn't cover any question that you had in mind, you can reach out to our experts on LinkedIn, and I'm sure they will be more than willing to help you and get back to you with the answers. So I guess that's it for today. A big thank you to all our great listeners, and stay tuned and see you at the next webinar. Thank you.
Thank you so
Bye.
much.
Thank you very much.